Hey, good afternoon. This is Neil, Simpler Futures at Simpler Trading. And today was Friday, the 20th of October, options expiration Friday today. We had a couple more Fed speakers again today, but the good news is, as I had mentioned, I think yesterday in last night's video, that their Fed speak blackout starts tomorrow, Saturday. So there won't be any more of that garbage. And at least until the next rate announcement, which we'll have on November the 1st. But by the way, it looks like it's looking more and more like that's going to be a pause, but we'll see. So, do you remember not too long ago when the market was breaking prior to this last bid that went up into 44.30? Remember when it was breaking, we had a target down here that we were looking for, and it was 42.30, and as a backup 42.05. The reason for those numbers is that's the balance point of control of this sideways like April through mid-May overlapping sideways bunch of trade right there at 30, and then value area low to 05. So it never traded there. If you recall, it made like a 35 low and traded out of the hole, and we were like scratching our heads. What was that? How'd that happen? That's kind of weird. And then, if I can remind you, not too long ago, just a few days ago, is it traded into the high of the move up here. What it did, we've talked about this as it was doing it. What it did was it made the gap mid. Remember the gap on the top up there on an RTH session? If you switch this to RTH, you can see it. The gap was 18 by 46. It made a 31 high, touching off on, look, I placed that right in the middle of that hole. You can see it's about 31. That's the high of the move right there. So it made the gap mid as the high of the move. Now, when it was moving up higher into that gap mid, I was very interested, pretty convinced actually, that it was going to go ahead and close the gap at 46, but of course we know now it didn't. I was quite surprised on the bottom down here that it didn't trade 30 when it was down there, of course, but it didn't. And so here's what I'm getting at finally, right? It traded a 35 low, not 30. It traded up, found a 31 high, not 46. Gap mid, not gap fill. It's rolled back over. It's pressing the bottom of the range back down here again. I assume this time around it's going to go ahead and tag that 30 print. 30 and, I mean, backups 05. Early next week on the Stock Traders Almanac is bullish, but, you know, we could certainly, I don't know what matters right now, to be honest with you. I mean, Stock Traders Almanac is, you know, historically, it's pretty good, right? I mean, it gives a good read. Not 100%, but it gives a good read. But my point is, right now we're getting news out of, you know, the Middle East and this new war and all the bad news that's coming out of that. And then it's Fed speak, and they're very much intentionally trying to talk the market down. You can read the tea leaves or read between the lines or whatever you need to do, but it's quite clear that that's precisely the mission. You know, and because that's part of the dual mandate, right? It's inflation and employment. The inflation part, how do you get people to stop spending money? Well, make money more expensive for one. Certainly the Fed can handle that. That is their tool, the interest rates. They can certainly and have done that. The other is, you know, get the market in, you know, kind of pulled back, and it sort of tamps down the wealth effect. You know, you see your statements from your financial advisor, you're like, oh, it's not looking too good. Yeah, now's not a good time to buy that new car or house or whatever. So you stop spending or slow the spending. So I think the Fed's intentionally doing both of those. But like I said, that's the good news, right? After tomorrow, Saturday, there is none of that garbage for the duration leading into the next decision, rate announcement, November the 1st, I think. So look, that's it. That's what I got. I mean, on the way back up, you know, it's going to have to start doing something that it's not doing right now, and that is stop making lower highs, you know, start making higher lows, and then we'll know that it's on the way back up. But it's not until it is, and right now it's still headed lower. So, you know, what can I do about that? I mean, I just go along to get along. In fact, in the go along to get along camp, you know, I had, well, if it's going to be bearish, we'd give it about 4,300 kind of over under, and then mark it down to, as far as T3, 51. And if it was going to be bearish today, and it traded down to, I don't know, 45, so that's pretty good. Traded through that T1 just, or that last target just a little bit, but not by much. So that's it. I mean, you know, it's probably going to hit the big balance print down here that we were looking for when these lows came in early October. You know the drill. I don't need to repeat it. Good trade, nice weekend. Get some rest. We'll come back, look at this thing again next week, and have another poke at it and see how we can do. So until then, do take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me